Welcome back, my buddies. Hope you're doing well. This is going to be the review of today. It was the best day of the week so far. This was the result after 4 trades. One was a nighttime trade. That's a rule breaker. That's something I'm going to have to work on, but did get to the target. I made sure I got to the target. Minus what I did last night. So don't try to make another mistake to fix another mistake. So if my target's 200, last night I lost 40 and some change. That's why my target's now 155 today. So let's run through the trade real quick. And I wanted to touch on a subject that I think might help some people. It certainly helped me to think this way. And I'm right now, I know that I'll be going back to funded. It might take a month, it might take 2 months, it might take 2 weeks, but whatever the case may be, sorry, I'm just trying to clean up something here. Whatever the case may be, I'll be going back and I'll be making money this time. Third time lucky, I've been funded twice. This time is going to be the final time. So the pattern is the same. We spoke about it in the last video. 10-minute chart as the anchor, 1 minute is the trigger, looking for traps. So I'm going to go through all what I see briefly from my time frame that I start 2 o'clock, and then talk about the one I caught, or the two I should say. I caught I took 3 trades between 2 o'clock and now it's 25 to 9 Central Standard Time, and then one last night to make the 4. So rather than concentrate on what I did, I want to see what was there and then we'll compare it with what I did. So real briefly, because I don't want to make this video too long. Any questions you can just ask, but the last video was pretty thorough in its explanation. So at this stage, this point in time, 2:15ish, we had should I bother showing you? Yeah, I'll show you this one as an example, and then the others you'll just have to believe me that the 10-minute is pointing down. So if you look here, let's move this line. No, I want to leave it there because it's there for a reason. If you look here, you'll see we had support, breaks it, tests. Now it's resistance, albeit now it shot up, but that's because the pace was so, the momentum or pace, whatever you want to call it, was so strong that it poked through. But for all intents and purposes, like a trampoline, it held that level, came back down, held with wicks, air kiss, held it, air kiss, come back down, held it. And at this stage, we had the first, because the pace is low, we had the first convincing close above. This is not convincing, it's just because it overshot the mark. This came up, tried to hold, you can see that little hanging man come hammer, negate. Again, talking about what we spoke about last time. People enter on closes and on breaks of highs or lows if it was a reversal candlestick. So we got all the longs there, came up, a few ticks above, back down, and that's a trap. So when it comes back up here, you want to look short. Or didn't work very far on the 10-minute, but that's the beauty of trading on a lower time frame trigger chart. If I can get the word out, you can drop down and get trades within that and still come out with good risk to reward, even though the overall 10-minute thing bias failed. So this is 220, so let's go back. You see wicks coming in from here anyway, but anyway, any time after 220 when that candle finish was definite shorts. Let's go to the 1 minute. So looking at 220 is, where is it? Here, right there. So what am I looking for? This is like a Matryoshka effect, what I spoke about many times over the years. It's the exact same pattern almost that we saw on the 10-minute, we're seeing on the 1 minute. So wick, holding, break, convincing close outside, try to hold, close, trigger the longs both on the close and on the break of the high, straight back down. So now when we come back up, I want to get short. Looking, you can, and this is where, and this is what I want to talk about after. This is where there's some subjectivity. Trading is never going to be black and white, but you need to create your own black and white rules that hold enough times to make it worth your while. That's it in a nutshell. So maybe we won't even need to talk about it after. That's what I wanted to say. I'll repeat it because it's very important. You cannot know what's going to happen next. A la Mark Douglas, God rest his soul. You need to just take a chance. Not take a chance, maybe that's misleading. Yeah, invest, take a chance, stick with one way of doing things, and make sure that that one way is conducive to hitting the ball out of the park a few times so that you can make up for the times when, more than make up for the times when it doesn't work. So just as long as your revenue outweighs your costs, like any other business, you just have to make it worth your while. So this is where these features come in to play. Resistance, break above close, candle. So resistance became support, immediate negation, we want to go short. Some people just go short, and this is where you need to decide your rules. What I do is I go either on a reversal candlestick and or a break the first candle to make a lower low. So this is a higher low, equal low, higher low, lower low, go short there, 05. And where do I put the stop? I put the stop above the last place where we were still long bias, which is here when these people went long. So that's 08, so I put it there. 09, I'm short at 05, 09 is a 4-tick stop. And then manage according to your rules. My rules say defend after 2R. 2R is 97, probably. And I also have another rule that if there's a 2-wave move in your favor, which we can see here, 1, 2, then I go break even. So that trade would have resulted in a break even trade most likely. 97. Yeah, that one would have resulted in a break-even trade, which is frustrating because it did go 90. It did go 05 to on the arse 95. So 10 for 4, 2.5 to 1. Other people might have a rule where they take 2R off the table. Other people 3R. But in my case, that would have been a break-even at 220-ish or whatever, and then it came back up at 253. Next one was here. The 10-minute is pointing down at this point. I'm just looking across to the 10-minute from 1520. Anytime after 1520, you're looking short. And what do we have here? We have failed 2-wave reversal. 1, 2, the wicks. And this wick to change polarity. This was harder to catch, and I'm not sure I would have caught it. But 19 stop goes above the last place to hold. I wouldn't put it here. I guess you could put it 21 as well, in which case would be 4 ticks. But I would elect to put it at. I mean, if you waited on the close here of this candle, then you could comfortably put your 4-tick stop here. That I would have, as soon as I've seen 1 attempt to go higher and 2, when this is coming back up, I drop my order in for 6 ticks, because that's, as you will remember, the most I could risk. 25 means, if I want to stop at 25, that means I drop the order in at 19. I don't know if that would have filled me, but that would have been a nice trade as well. I won't get into the, excuse me, I won't get into the ins and outs because this video already is 9 minutes. And so that's the second trade that there was. And then here's where I got involved. What the hell is that? Here's where I got involved. Here we got long bias down here on the 10-minute chart. You can see the appendix. It came back. I took a long here, trying to catch this 2-wave failure. 1, 2. So I took a long from 88. That didn't work. Then I caught this one down here, which I'm not even too convinced that that is even a trade. There's an animal in the room here. What the hell is that? Just pausing the video a second. I'm going to carry on anyway while it's here. So this one is, I did make money on this, but this, I may eliminate this type of trade. I see what I saw, but is it something you can replicate? So I've got the appendix here. Here's one side, here's the other side. Wick down, there's no closes there. When it comes back down and wicks again, you go in, put your stop under there, ride it to wherever you're going to go. In my case here, for a 2-to-1. But I'm not sure about that trade, and this is where my personal week review, I'm going to look at that. But the place where you do get trade is where a sort of what I call a chunky trade is here. Because you've got this, the A and B of this appendix here. So you're looking to go down, you test it with the wick, that's still pointing down. And when you get the trap here, this one here that gobbled up all these candles, then either through the high, or if you find another way like I did to get in beforehand, I waited. You could have gone long at 82, get the stop at 78. I waited until this candle formed, triggered again, put in this low again, and then I wanted to go. So basically a 2-wave first entry and second entry here. But I couldn't get filled at 84. It did get my price, but I couldn't get filled. Went up, came back. My rules would have told me to get out at this point or break even. So when it came back down, as much as I wanted to leave 84 on, I couldn't. Then I waited for the next pattern to set up. Again, that's this. It held, break down, close under for the first time, an immediate reversal. Tried to get 84, no, I tried to get 85 this time, and couldn't get that either. I think it was 85, or was it 84? No, it was still 84, trying to get the stop under here, and that's why I missed it. Now, so a lot of frustration, and you'll get frustrated if you don't have your own rules. So then the main pattern is this one here, this bigger, sort of chunkier, if we might use 2 lines like that, 2 waves, 2-wave attempt to go lower. And at this point, when you get this candle and this gap, that's where everything changed. That's where the short bias ended, and the shorts got trapped on this trigger here out of this move and went up. And in fact, when it came back, you see what happened. I got long here at 87, I think, yeah, to get my stop at 81. I got 87, the best entry almost possible. When I saw the wick, it came back down. I waited for the wick to form, and it came back down, got me in. My stop was under here. I've put a line here and here to show the rising window, if you know anything about Japanese. So if you've studied Japanese candlesticks, Steve Nissen stuff. And away it went. I got out for the day at 6, I think, from 7, 87. Acting as if I hadn't taken that trade last night and just getting my daily bread, so to speak. But the target was 16, which just got missed by a tick. It was 1 tick off of this high. If you want to use measured moves and all that kind of stuff, you can go from here to here, and that will give you this target as well. You can see that hit pretty much just went over a tick or 2 and then stopped there. And this is where we are now. We came back down here, we went up and we're jiggling around. There are other trades, but the video's too long now. There's one here, and that's it. No, there's one here, and there's one. No, you wouldn't have caught this one here looking at the 5-minute, at the 10-minute. Yeah, possibly you would have caught this one here. And then this long here you would have definitely caught. Same modus operandi. Range, breakout, immediate not immediate turnaround, breakout, hold via the wick, and then negation, go long. Manage it according to your rules. And that's it. So yeah, all I wanted to say was, so I got 19 ticks on this, lost 6 here, and gained 8. Gained 8, lost 6 here, gained 8 here, and gained 19 here. So yeah, the thing I wanted to say was just we need to embrace uncertainty by making our own rules that try to take advantage of the little edge that there is in that uncertainty in a probabilistic way. So maybe I'll do a video on that another time, but it's long enough now, 15 minutes. Gonna end the video here. Back here next time. See you then.